All right, well, good morning, everybody. It's 15 minutes after the opening bell of the New York Stock Exchange. It's Mickey Blindside here. It's been a long time, Checkmate crew. It's been too long. Last few weeks, I've been in many different countries for business. I've kind of neglected the Checkmate crew, but no more. I'm back, and hopefully we'll get back into the schedule of things. All right, so without further ado, let's actually just let's just get right into it. So let's first talk about market internals. So guys, yes, I haven't been posting the junk bonds ADL line as often as I wanted to, but luckily for us, in the past few weeks, we haven't really seen that big of a change in the junk bonds ADL. That's our junk bonds advanced decline line. If you go to our YouTube special edition episodes, you'll see a whole episode of me explaining what the junk bonds ADL and advanced decline line is and why it's important. But it's been relatively flat, although declining slightly for the last few weeks. I don't really have any concern or any reason for concern because of this. It's just been chopping around, and so markets have been kind of choppy for the last few weeks with really no clear direction on where it wants to go. I think the big movement actually will come soon. We got this debt ceiling vote here in the U.S. Oh, but Mickey, you said that you don't follow politics, especially for investing. That is true, okay? However, the debt ceiling is a little bit different because it does affect the supply of Treasury bonds. Now, this is something that I went over in December. I also went over this in January and February as well, too. This is something we've been looking out for months. Okay, so whenever the U.S. Treasury runs out of money and they reach their debt limit, initially what they do is they start borrowing from employees' pension funds, okay? And so that can drag on the debt ceiling debate for another few weeks to few months. I thought that around tax time we would eventually, run out of those pension funds and they would have to do the debt vote around then. But it ended up being that they had a little bit more money than what I initially thought. I thought this was going to happen around April, May. It looks like it's going to be more like end of May, early June. So Janet Yellen came out, and she's the Secretary of Treasury. She said that there's enough money until June 1st. So I imagine that before June 1st, they're going to do some type of late debt ceiling deal. And once they do that deal, within, I would say, about 5 to 7 sessions, maybe about a week to a week and a half, they're going to start issuing more Treasury bonds. So what happens when, so right now, for the past few months, the U.S. Treasury has not issued long-term Treasury bonds in order to fund their obligations. They've been doing short-term Treasuries, but no long-term Treasury bonds. So now that the debt ceiling gets raised, okay, at some point when the debt ceiling gets raised, they're going to issue Treasury bonds again. And when that happens, what do you think happens to the Treasury rate? You got it. When there's a flood of Treasury bonds, the supply of Treasuries go up. When the supply goes up, price goes down. When the price of bonds goes down, the yield on those bonds go up. And when yield goes up, what happens to multiples of cash flow generating assets like stocks? Yes, we have a compression of those valuations. Okay, so I think that within a couple of weeks, we're going to see this pop up. The TNX, that's the 10-year Treasury yield. We're probably going to see it pop up. When we do see it pop up, I think tech stocks are going to be in a world of hurt. And that's where we're going to see tech underperform the rest of the market. Right now, tech has been outperforming the rest of the market. That's the IVWIVE ratio chart. That is the growth ETF divided by the value ETF. And so when this ratio is trending up, that means growth stocks and tech stocks are doing better. And we've seen that ever since, actually, from the whole banking fiasco, the SVB and Silicon Valley Bank and, all those banks that fail, Signature Bank, all that. Ever since then, we've had this outperformance in tech where value stocks have really been underperforming, and we've had tech stocks outperforming. All that really has to do with also interest rates. We saw interest rates drop because of that whole episode. I told you guys then too that I thought it was just a big fiasco, and that there was no real reason to fear. The banks were well capitalized, and it was just fear mongering, and so it was. I mean, but one of the big effects of all that was that people went after these long-term treasury bonds, and we saw the yields drop. And so when yields drop, anything that's priced for speculative growth in the future gets bid up. Okay, so that's what we saw here. As the TNX dropped, we saw all types of growth assets go up. Semis went up, tech stocks went up, even crypto went up. People were calling crypto a safe haven bid, which is probably one of the most ridiculous things I've ever heard in my life. That's just a narrative. It's just basically bond market. Bond market is king. When interest rates drop, you see anything priced for speculative growth go up, or anything that is interest rate sensitive, starts moving. Gold also did the same thing. As interest rates drop, the pain of holding gold becomes less, right? If your interest rate goes up, why would you hold gold? You would hold currency so that you can get a yield, right? Well, when yields drop, the pain of missing out on that yield becomes less. And so therefore, gold and precious metals get a bid because of that. So that's how they're all connected. So anyway, internals, where was I? Yes. So junk bonds ADL has been flat. Here's where it doesn't look very good, and that's the New York high-low line. So the New York high-low line that takes the New York Stock Exchange issued stocks. It takes all the stocks that are making 52-week highs, and it subtracts all the stocks in the New York Stock Exchange that are making 52-week lows. And right now there are more stocks making lows and highs. So this is curving down. It's below all of our moving averages. That's one of our signals that we should probably, this is in itself is not a warning sign. All right. However, it is something to consider, and especially when we see the junk bonds ADL go down as well too, and this go down at the same time. Those two are signals that often, that we're, any type of news or any type of volatility, we might see some downward pressure in the stock market or in any risk assets for that matter. Okay, so that's our market internals. If we also look at the New York Stock Exchange advanced decline line, we're also seeing it somewhat stable for the most part. This coming down generally is not good for small caps. This being elevated is usually good for small caps. So, if we see this start breaking out, which I mean it could. I mean, I'm kind of surprised that the New York advanced decline line didn't really drop even more. So I'm kind of in the camp where we might actually see the Russell 2000 start performing again. And out of all the indices right now, the Russell 2000 looks like it is closer to its lows than the rest. So if we actually take a look at the RUT, which is a Russell 2000 index, there we go. It's actually closer to the bottom than some of our other indices like the QQQ, SPY, the Dow. As you can see, they're well off their lows, but the Russell is not. And the reason why the Russell is not is because a big portion of the Russell 2000 is regional banks. And so we all know that regional, I don't need to repeat myself here about these regional banks. Again, I thought it was a total fiasco. I think it was total fear-mongering. It turns out I was right, but still, the Russell 2000 still took a huge hit for that. We shall see if this comes back or not. Again, I would want to get confirmation from the New York advanced decline line first before getting into the Russell. I do think that maybe we might have a better opportunity of getting into the indices probably closer to the summer, around June or July or so, after this whole debt ceiling episode passes, because it will get passed. I mean, the debt ceiling vote has happened many times, and never a single time has the United States defaulted on long-term loans. Or on their obligations or on their bond payments. Okay, it's never happened before, and it's always the case. Every time before a debt ceiling debate, people come out and say, "Oh, what if this? What if that? You know, what if they don't pay? What if they don't make their bond payment?" They always do. It's always an 11th hour deal, and they always do it right before their vacation. And guess when their next vacation is? It's in June. So they're probably going to try to get this done before then. And then the countdown begins. About usually after the debt ceiling gets passed, about a week to a week and a half afterwards, we start seeing the Treasury selling those long-term bonds. We start seeing that spike in that TNX 10-year Treasury Bond Yield, and that is when we're going to act. And that's when I might do a small short on the indices by using put debit spreads, or just using puts on indices. I'm going to go after the NASDAQ, because the NASDAQ is probably going to fall the fastest when TNX goes up, because, again, it's based on valuations, and growth stocks just don't do well when interest rates go up. Okay? So my next move is waiting for that debt ceiling to pass, wait about a week and a half, see those Treasury bonds get auctioned off, and then boom, short the NASDAQ via long put debit spreads. Okay, so that's my plan for the triple Q. Next, let's take a look at the 10K count. It is doing kind of abysmal, mostly due to MOS. Right now, MOS is just not performing. I am still convinced that this thing will perform. All right, and it just may take a little bit longer, but we have almost 2 years, 1.5 years on this. I do still think that it happens. We still have 2 years on it. I still have faith. We shall see. Okay. The reason why I think MOS is going to go up is because of the crops. And I've went over my thesis before, but I'll just go over it again here. You know, with crops coming up, DBA is the ETF that measures soft commodities, like agricultural commodities. So DBC, yeah, DBC is all the DBC is all the commodities. So this includes energy, metals, all of that. DBA is just agricultural. So as agricultural products go up, and and also too in the United States, we had a phenomena where in the last 2 years, fertilizer prices have been so high that farmers have not been fertilizing their soil. Cornfields need to be fertilized every 2 years, because corn leaches a lot of nutrients out of the ground. And so at some point, there's going to be a mad dash for fertilizers. And that's where the thesis comes in. Now, MOS right now is not performing, but again, I do think that at some point this will go up. And, just like it did right here, right before, 2022, I think we're going to see something similar to this. Maybe not in the same extent, but I do think that we revisit the 70 to 75 zone. And so that's why I got the 45 strike calls. Well, now there's 44.75 because of a dividend that got paid out. But whenever a special dividend gets paid out, it subtracts from the strike from your long-dated call option. So, if it goes up there, we still stand to double or triple what we put into it. So I'm waiting on that. We shall see what happens. We shall see. Okay, we're also in Chevron as well. We might as well get into the energy. I know one of the requests that was made for the market memo today was the energy sector. Let's actually take a look at crude oil itself. Now, crude oil, what do I always say? If you want to know where crude oil is going, you got to really take a look at the distillates, which is gasoline. We're approaching the summer driving season. Usually that's after Memorial Day. all the way to usually August, September, usually August, end of July, early August. That's the main driving season. If we see crude oil going up, but gasoline doesn't make a meaningful upward move, well, that would probably be a short signal for crude oil. All right. But if we see that crude oil is not really going up all that much, but we see gasoline break out, that would be a signal to buy crude oil. Okay. But I do think that crude oil is going to go up. I think all the commodities will go up with another second wave of inflation. I think it could start by this summer. I just don't know what the timing of that is going to be. It could be later this summer. It could be maybe into the fall, later this fall this year, or it could be even early 2024. But I do think we see a second wave of inflation. I think it's going to start in the crops market first with DBA, and then it's going to trickle into the energy. Speaking of energies, let's also take a look at natural gas. Natural gas has been kind of just like flat-ish near the bottom here. I do think natural gases will go up too, also because of crops. With potash, a lot of the potassium based fertilizer companies, they're actually pulling back production of potash, and I think that's going to cause a shortage of potash. So then they're going to have to make urea based fertilizers, and those are made from natural gas, and that's actually going to fuel, I think, the price rise in natural gas as an energy commodity as well too. And again, I think that kind of is going to happen toward the end of this year, early next year, as part of the inflation 2.0 or the second wave of this inflation. So that's what I see for natural gas. We're also in UUUU, not in the 10K account, but in the other accounts. This one is also this is a metals company. Uranium is a metal. So most of the metals are very affected by the dollar. The dollar right now is going to be mostly affected by the Treasury bond issues and auctions. So if we start seeing TNX, the 10-year Treasury, really go up, we're going to start seeing a bid for the dollar. All right, and when we see that bid for the dollar, watch out. Most of your metals are going to be, most of your metals are probably going to have deep pullbacks. So, I mean, I imagine that the debt ceiling passing, always causes this like euphoric first reaction. Again, that's why it's not right after the debt ceiling passes. You need about a week and a half to pass before you can start shorting. Okay, so during that time, I imagine that some of these metal stocks may run up, or some of these other stocks may run up. That is going to be my opportunity to sell some calls on Quad U and buy some protective puts. So that's what I'm going to be doing on Quad U after the debt ceiling passes. Okay, I'm going to be selling calls, buying some protective puts on this Quad U. Okay, so that is that stock. What else did people ask for on voice chat? If you got actually other requests, go ahead and put it in the chat if you're joining us on YouTube, or if you're on the Discord, put it on the voice chat text and I'll get to it. So yeah, we went through oil, we went through debt ceiling and timing. Again, it's whenever that announcement comes up, about a week and a half afterwards, that's when we go for it, go for a short. And what else? Crypto. I usually go over crypto as well too, so I might as well go over that. And tomorrow we'll do a more deep dive into some of the holdings that we've acquired for the last few months. Today is more of a macro and kind of bird's eye view, just getting back into the market and swing of things. I am a little bit rusty on this right now. So let's see here. ETH. Let's take a look at OI. OI is just kind of ho-hum. It's kind of just... it's just kind of in the same spot as it was when I last left a few weeks ago, a few months ago. Let's take a look at Bitcoin. Bitcoin, same thing. It looks like open interest. Oh, it's a little bit elevated here. Oh, it's $8 billion. Okay, so Bitcoin open interest is saying somewhat elevated. Interesting. It's been actually kind of funny. Actually, what is it? Last couple of weeks, there was that whole shitcoin episode with Wojak and Pepe and all of this, and that was kind of interesting. I participated in some of that, mania. Made some funds initially, and then took my principal out, and then kept rolling with the profits, and now we're kind of stuck in it because it just kind of fell off the map. But right now I don't see any big changes in Ethereum's open interest, but Bitcoin's open interest still remains quite high, and which is kind of interesting. I see that most of the open interest, or most of the volume, is being traded in the end of May contract. We'll see what happens to that. As we get closer to the end of the week, we may see some more activity. Usually, that's what I noticed too. I mean, I don't have any data. I haven't really collected like the formal data on this, but it seems as if we see a lot more options activity as we get closer and closer to Friday's expiration. So maybe we see some changes tomorrow or the day after, especially when it comes to these weekly options. So I will do a little bit more deep dive tonight, and we'll go over the crypto options market in more detail tomorrow. Oh, speaking of which, I mean, we spoke about interest rates for a second, back to kind of more normal markets, more traditional markets here. If we look at the CME futures, we had that 25 basis point rate hike just a couple of weeks ago. It looks like the market now is pricing in for June. It looks like the market is pricing in that we're going to stay the course and not have any rate hikes or rate cuts in June and July as well. But September is when the market is starting to consider a rate cut, possibly 2 rate cuts, possibly 3 rate cuts before the end of the year. I don't know about this. I really don't know about this. I think before June, July is over, this is going to get all repriced. I don't think we're going to get a rate cut. I think that would be crazy if we get a rate cut. I mean, then again, Fed has been behind the curve, I mean, since 2021, really. So what really changes, I guess? I mean, yeah, but I think if they are data dependent, they're not going to cut rates this year. I just don't see it happening. And I think this is going to get repriced. And how it's going to get repriced, we're probably going to see bond yields go up because of and this will get repriced as bond yields go up. One of the things that we take a look at for our bond yield indicator is the copper gold ratio. I don't know if you guys remember this, but our copper gold ratio also has been dropping. I mean, this is quite strange. This is quite strange to me. Initially, it did drop, and remember we said yields were going to drop, and we did. We got our move, actually. If you look back in our past videos, I said, it was around here or so. It's like, the rates are too high. It's going to drop because the copper gold ratio is down. Well, the copper gold ratio keeps going down even further. So I don't understand if this is going to keep going down or if the copper gold ratio is going to go up. If the copper gold ratio goes up, it needs to make a move soon before June, July, or whenever the market is pricing in that rate cut, or there's going to be a big disconnect. Maybe that indicator is no good anymore. It might be. Maybe that indicator is broken. That's what I'm starting to think now. I'm starting to think maybe those metal markets are not as important to the overall markets that they used to be. And that may be the case. But as I do more studies on that, I will let you guys know. Again, dollar is where it's at. The dollar, I think, is going to move based on where the yields move. I think also a good indicator for that will be the US dollar Indian rupee. We've been talking about this for months too. The US dollar Indian rupee has just been coiling in this range, tighter and tighter and tighter. And if it breaks out, I think that's a very good signal that we're going to see some hoarding in the dollars, especially, and there's going to be competition for dollars overseas. So we're going to see emerging market countries competing for dollars in the same way that domestic investors sell their stocks for dollars. Because when you're selling your stocks, you're demanding dollars, right? You're selling your stocks and buying dollars with your stocks. That's basically what selling stocks for dollars is, all right? So if the emerging market countries also are competing for the same dollars, we might see dollars go up. And when the dollar goes up, I think we could see some volatility in the market. So that's what I see so far as far as the macro environment is concerned. Some of you who are on the Discord, I had to just mute JMR because there's some background noise. But if you got something to say, you can say something. What's up, man? Long time no see. You don't have to say anything if you don't want to. But it's good to see you again. Some of you are asking about gold. I see a comment here about gold on chat. Gold, you know, is a hedge on currency devaluation. So if the dollar goes down, generally gold goes up. When dollar goes up, gold and precious metals come down. So if we see like I said before, if we see the dollar spiking, we might see these metals coming down, also quad U, uranium, all these other metals as well too, because most of these metals are in XME. But anyway, gold has just had a meteor. This is just a huge rise in gold. One of our plans from earlier in the year and end of last year was to get into gold and silver, and it's like that's the one play I should have done, but I didn't. It's it's kind of crazy, isn't it? We were planning and waiting for this moment, and right when this happened, I was gone. I didn't even notice, and then boom, it just like too late. But yeah, if in the summer silver can give me another chance at an entry, I'd like to get a crack at it just as a swing trade. Okay, just as a swing trade. If the dollar keeps going up again, metals are going to come down. So it's not something that I want to buy and hold. So let that just be a warning. Oh, by the way, our food stocks, PPC. People have been asking about this. I got some DMs about this. I know, guys. PPC, some of my longer term stock picks from the past, I would say 6-7 months, haven't been really doing well, which is kind of new because usually it's my longer term stock picks that do well, and usually it's my swing trading that doesn't. But now it's all flipped. Starting from like mid last year, we've been doing really well with our put spreads and with our swing trades, but then from the longer term stock picks, I don't know, have been just not been doing very well. But these are longer term plays, so I have time on my side on these. But remember, we got into these at around here. I remember around here it was like around 27.5, 28. I have been selling some premium against it, but it's still nowhere near break even. It's not that bad, and it's a really small. I only bought one introductory, an initial group of shares, and I didn't buy any more because I got scared when I saw this huge drop. But I still think PPC is doing really well. As far as their earnings are concerned, they're a very boring company, and they're doing extremely well. It's one of the only few meat stocks that you can get in. Tyson's the other one. I did choose PPC over Tyson. I warned you guys about Tyson, and I said I favor Pilgrim's Pride over Tyson. Tyson, I think, is having some issues. If you looked at their earnings last time, they had some issues with some hedging that went against them. They took a big hedging loss, almost like 5% of their revenue for the year. They took in 1 quarter loss. I think it was some grain trades that didn't go their way. So that was a huge markdown in their earnings. Also, too, Tyson got involved with that, that near meat or whatever that's called, or the fake meat. impossible meat or whatever. Anyway, that was like a huge fad like a couple years ago, right? It turned out to be a huge flop, and now they have a depreciating asset, all the plants, all the equipment to make all that stuff. It's cutting into their earnings now. And so I think it's that plus the hedging loss, and that's where Tyson is getting just wrecked. I still, out of the food stocks, I still prefer PPC. When that next inflation episode comes, I think PPC performs again. I think it's just a matter of time. I have shares in this, so I have time on my side. I'm willing to just hold on to this and sell premium against it. I have no problems doing that. Will I buy more? I might. But I don't know. And as always, I'll let you guys know on the Discord if I do buy any more. Any questions, comments, rude remarks? This is your time. Anything you guys want to go over? Going once. Going twice. All right, well, so in that case, we'll wrap up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's love the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right, I'm going to be back on tomorrow, 15 minutes after the opening bell of New York Stock Exchange. 9:45 a.m. Eastern Time. I will see you guys tomorrow and Thursday, same time. Hope to see you guys then. Ciao.